Welcome to the program. I'm Okpeyemi Owosheni. We begin with business news. Renaissance, an indigenous oil and gas company, has denied report of a gas explosion at its gas plant in Rivers State following claims of a blast at the facility on the 23rd of March. Earlier reports had suggested that an explosion occurred at the Soko gas pipeline operated by Renaissance. However, Renaissance swiftly clarified there was no explosion or fire at its gas facility. The company stated that its operations were running smoothly and that all facilities were secure. The company further emphasized its commitment to safety and environmental standards, assuring stakeholders and the general public that its facilities are regularly monitored to prevent such incidents. And Benin Republic and Togo, Nigeria, $8.84 million for electricity consumed in the fourth quarter of 2024. The Nigerian Electricity Regulatory Commission reviewed this in a report highlighting the remittances made by bilateral customers, domestic and international, and special customers for invoices issued in 2024, the fourth quarter, by the market operator. According to the report, the 6 international bilateral customers being supplied by GENCOs in the Nigerian supply industry made a payment of $5.2 million against a cumulative invoice of $14.05 million issued by the market operator for services rendered in the fourth quarter of 2024, translating to a remittance performance of 37.08%. We'll go on a break now and be back with company news. Welcome back. Now in company news, United Bank for Africa PLC has released its audited financial statement for the year ended December 31st, 2024, reporting a pre-tax profit of 803.7 billion naira, a 6% increase from the 757.6 billion naira recorded in the previous year of 2023. Now post-tax profit for the group surged by 26.14% to 766.5 billion naira, up from 607.6 billion naira in 2023. Now, this represents the highest annual profit ever recorded by the bank, solidifying its status as one of Nigeria's most consistently performing financial institutions. Over the last 2 years alone, UBA has reported a cumulative profit of 1.37 trillion naira, a sharp contrast to the 570.4 billion naira it posted in the 5-year period leading up to 2023. And Dangote Sugar Refinery PLC has announced the appointment of Yemisi Ayeni as an independent non-executive director. In a statement, the company's board of directors approved the appointment on the 20th of March 2025, highlighting her wealth of experience in finance, corporate governance, and strategic leadership. Ayeni, an accomplished finance professional, graduated with honors in economics from the University of Manchester, UK in 1985. She became a chartered accountant in 1989 and is a fellow of the Institute of Chartered Accountants in England and Wales. Her career spans about 3 decades, before returning to Nigeria in 1991. We'll go on a break now, but when Money Matters return, we'll be discussing the Securities and Exchange Commission promising stricter compliances in protecting investors in Nigeria's capital market. I'll bring you more details after this break. Welcome back. The Securities and Exchange Commission has reaffirmed its commitment to protecting investors in Nigeria's capital market by cracking down on fraudulent activities. According to the Director General of SEC, Emomotimi Agama, operators engaging in unscrupulous practices will face strict penalties as the Commission prioritizes safeguarding investor interests. He called on existing and prospective market participants to collaborate with the SEC to foster the development of a transparent and robust capital market. Over time, fraud and corruption have had a significant effect on the market capitalization of Nigeria's capital market. The Securities and Exchange Commission recently announced additional enforcement measures, including the introduction of a name and shame journal to publicly identify capital market operators who violate regulations. Now, this initiative emphasizes the Commission's zero-tolerance approach to infractions in the capital market and aligns with its enhanced enforcement strategies. Now, let's discuss this further. Equity and fixed income sales trader at CSL Stockbrokers Limited, Joshua Joseph, now joins me on the program. Thank you for your time, sir.
Good morning.
Thank you for joining us. Now, there has been numerous warnings by the Securities and Exchange Commission for Nigerians against investing in fraudulent stocks. Now, what factors would you say are responsible for the increase in fraudulent activities in Nigeria's capital market in recent times? And what steps do you think the Securities and Exchange Commission and market operators should take to effectively address these issues that we are seeing in the Commission at the moment?
Thank you very much. So what we've seen played out, right, it's the fact that Nigerians, we are in the inflationary pressure environment, and the economy, we've been experiencing lots of economic hardship, right? And so most people, most investors are just looking for high-yielding instruments or opportunities, which we've seen have made them more vulnerable to all those fraudulent schemes, right? You see avenues and saying that, oh, okay, where can I double or triple this money within 1 week, within 2 weeks, right? So the enticement of those attractive levels as what led to most individuals falling victims, right? And we've also seen the use of digital presence, right? Most especially the digital fraud. And we've also seen some of these platforms also making use of social media influencers, which we've seen promoting all these Ponzi schemes and disguising it as legitimate investment, right? One thing we've also seen is that these, so to say, fraudsters, right, have been taking advantage of regulatory loopholes, right, and also weak enforcement. That's why you see the SEC coming out, right, to raise awareness against all these loopholes and individuals or firms, right, raising funds illegally from being detected majorly.
With the Securities and Exchange Commission's crackdown on unethical practices and the introduction of stricter regulations like the fit and proper persons test, now, how much impact do you think this would have on market operators, and what do you think stockbrokers can do to ensure that they remain compliant while also fostering trust with investors at the same time?
So one of the key responsibility of capital market operator is ensuring integrity of the market, right, and ensure that investors has this trust, right, in the capital market at large. So we've seen the SEC coming out with the fit and proper persons test, right, which we think it's very essential and we ensure that only qualified individuals or capital market operators operate in the market at large, right, which will majorly reduce unethical practices, right? So these things will also lead to the investors building trust, which will also cause, we'll say, increased compliance, right, which will boost investors' confidence and attract more investors into the market, right? When we see improvements of KYC, right, from brokers and also the anti-money laundering rules, we see them protocol, all these protocols, when we see them applying all these, and when you see transparency in reporting, like we've seen the regulatory also coming out recently for asking stockbrokers to declare on a quarterly basis all those inactive accounts, right? So when you have inactive account, are also what led to lots of fraudulent activities. But when you see all these regulatory loopholes being tightened and bringing out various regulations just to ensure seamless compliance, right? I believe this will improve transparency in the market and also boost investors' confidence in the capital market as large. So I believe both the SEC and also the stockbrokers institutes or industry have leg to play in this, right? In the sense just to boost investors' confidence generally.
Now, in light of the SEC's increased enforcement effort, one of the things the Commission plans to do is the name and shame strategy, where they call out companies or investors that are defaulting. Now, I would like to know how exactly you think this would help Nigeria's capital market in terms of investors' confidence, market transparency, and ethical trading practices.
So for sure, we can both testify to the fact that we can't play out the importance of social medias, right? When you see the SEC releasing these journals, right, where you have name and shame, right, and you as a firm or you as an individual, you won't like your name to be in the public for a very bad attribute or bad figure, right? Which will also encourage ethical conduct from market operators. They will be very more cautious, knowing that their reputation is at stake. We could say for a fact that in the financial industry, the financial market, right, having a bad reputation, it's one thing that every operators tend to avoid, right? So when you have that rule in place that if you go against the regulatory requirements, if you embark on any fraudulent activities, you could have your name published. And we both know how it works, right? Once it's published, you see various news posting it and publishing this news across, right? It's more like almost everybody in the country, even outside the country, already know that you are involved in any fraudulent activities, right? So when you know this, right, it will strengthen investors' confidence. And when they see that, oh, SEC is publishing this particular company, right, involved in fraudulent activities, they will believe that, okay, if any other person is involved in any fraudulent activities, they will also be made known to the public, right? So it's a good step from the regulatory part.
All right, now let's talk about compliance, because it's one thing for the SEC to give regulations. It's another thing for investors and the market generally to follow those regulations that has been stipulated by the Securities and Exchange Commission. Now, what challenges exactly do you foresee for capital market operators in Nigeria, and how do you think they will overcome them when as regards complying to the regulations stipulated by the Securities and Exchange Commission?
So one thing is that when you have continuous or frequent policy adjustments, right? We could see various market operators struggling, right, and just be able to adjust, right, to these regulatory changes. We've seen we are moving into a technology advancement, right, and you would expect that market operators engage in ongoing dialogue with the regulatory, right, with the regulators just to ensure proactive adjustments, right, and that will help the firms, right. And one thing that is needed is when we see various policy coming in from the SEC, right, it will be best to have an implementation phase, right, and not just roll it over at once, right, because sometimes it involves regulatory costs, right, and also you may have this implementation burden in the sense that you will now have to start training your employees or your staff or the operators generally, right, to be able to understand the new regulatory or the new requirements, right? And one thing is, all these policies will lead to increased transparency, right? In terms of expectation of operational change, you should know that, oh, the whatever circular the SEC is releasing is public. So if you are trying to invest in a company and you are checking their, you are making some research on them, and you already know that, oh, there's a regulatory requirement that you should have this, you should have that, and once you are not finding this, right, in those firms, you should understand that there's an issue somewhere. So firms definitely be able to invest in compliance and take it very um, um, at a good thing to lead to all this regulatory reporting and streamline them, right, to ensure that they meet the requirements of the exchange, right, or the SEC at large, right. So we think that even though it might be a bit stricter, right, it will also change investors' confidence and in the market, which will also boost investors making research even after receiving advice from financial advisors.
Now, do you anticipate any changes in the way market operators behave or in the way securities are traded as a result of the enforcement of these measures?
So when you have more stricter rules, right, it will lead to more transparency, right? More ethical brokerage practices will be seen. You will see increase in market participants, right? Because when investors' confidence grows, it comes in the sense that you will see more participation in the market, right? And you would see various products coming into the market just to meet regulatory requirements, and you capital market operators will start employing different risk management tools, right? Who could help them to just provide diversified investment options for investors generally, right? So we believe that these rules or policies coming to the market should have more positive impacts than any negative impact if we're going to have any in general.
Now let's talk about the role of technology in all of this, but this time technological advancement like automated trading systems or AI-powered surveillance. Do you think this can help in identifying and preventing fraudulent activities in the market more effectively?
Okay, so one thing is, I'm very sure, even in the banking system, when you have unusual activities, right, to your account, it tends to be flagged, right? Having this into the trading into the capital market or the securities market will also help, right? That it's these surveillance system we have to track unusual activities, right, or unusual trading patterns, right, which could also lead to fraudulent activities when you start seeing or a recurrent activities, right, on maybe on a specific date of every month, and you just they tend to understand that, oh yes, this system will flag them out, right? And also you could it will also help to process or give room for more verification, right, in terms of trade log that goes into the market, right, which will avoid any manipulation that might come in, right. So we think that this technology in building this into the system, we also prevent fraud, right, and ensure more transparency and leads to you seeing a lot of fraudulent activities being flagged in the system.
Now, what do you think investors should look out for when choosing a stockbroker to ensure that they are working with a legitimate and trustworthy operator? Because I feel like it is really important that investors are also informed about making the right decisions.
Very much. So one thing is, we are in the kind of generation we are in is the fact that you just trying to say, oh, I just want to do everything on my phone, easy access, right? In as much as we want that, right, it's best for every one of us to do due diligence, right? There's always a way, right? Investors can always confirm, right, whether a broker is registered or with SEC, right, before engaging with them, right. Like we mentioned earlier on, right, the new journalists that the SEC is introducing. We also help investors to track record and reputation of various firms. And we've also seen the exchange publishing performances of brokers, right, generally. So all these, when you check track record and reputation, understand the transparency in fee structures, right, for companies, for brokers generally, right. All this will help investors to identify legitimate and trustworthy stockbrokers before engaging in any investment activities.
Now, it's the third month of the year and the year is still very long. Now, given the Security and Exchange Commission's focus on cracking down on illegal operators, what do you foresee for the future of Nigeria's capital market in 2025 and beyond?
So one thing is we do have a 1 trillion economy target, right? So we believe that having all these policies and regulatory activities in place, right, would improve market integrity, right, and also lead to more global recognition, right? It's not far-fetched, right? Because when you have all these transparencies in place, right, you expect that to lead to more foreign and institutional investment in the market, right? Which will show which make them show more interest in Nigeria assets, right? You will also see a more introduction of various market instruments, market products, right? And also the role of technology being in place, right? We make all these likes of fraudulent activities, fraud detection, are available, and you'll be able to do lots of trading activities, right, in terms of algorithm trading, which will enhance activities, right, and improve the capital market landscape. So very much sure that going to the year and beyond, right, when you have a very well regulated environment, a transparent market, right, this will definitely lead to more encouragement or participation from both retail and institutions, right, in the market, which definitely should lead to more capital market growth, right? And if the capital market is growing, definitely per venture, you would expect that the economy also grow.
Well, equity and fixed income sales trader at CSL Stockbrokers Limited, Joshua Joseph, many thanks for lending your thoughts on the program.
Thank you very much for having me.
You're welcome. Well, that's it on this episode of the program. Many thanks for joining us. I'm Okmayemi Owosheni. See you next time.